Good morning, all. CamelbackTrading.org coming to you this Monday morning, September 12th. We are looking at Window Trader's market profile of the ES and SPY. So a couple of things to talk about. First off, I am going to start trading the December contract. Now, it's the first time I've done a rollover since I've been trading ES. Now, I know when SPY goes ex-dividend, say, we'll put $1.50 on a dividend. I always use it where no matter where we open that next day, if it takes out reference points to the downside or upside, or if there's a dividend gap, I use that. I don't like back adjusted or whatever. I'm not going to add the dividend back in. Well, it's the same thing I think with the ES. So right now, if we open around the 4,100 level or above, which would be higher than where the September contract was trading, these single prints that they're filling would be gone for me. Now, the thing I still have to figure out is the price probe, because obviously the price probe from the September contract is going to be different from the price probe from the December contract. So I'll see how I would deal with that and the gap. As far as the gap will be probably, again, I have to figure it out. I mean, because with the 409, it looks like 95.50 around that level is the, let me see, is that the December contract? 95. So right now, the September contract high was 77.25. It is a big difference, right? So probably going to use 77.25 as my gap fill. But again, remains to be seen. These are some things I'll have to work out as we go on. The bottom line is this, though. The more important thing is this market, we said on Friday, now that we got above the balance, above 4,000, above the 50-day moving average, I think this market has a chance to get some legs around to the 420 level. Tomorrow we have the PPI, which is really the only big economic thing coming out for the next basically 7.5 trading days until the Fed, right? A week from Wednesday. So if they're able to digest that, I think this market has a chance to go test 420 and possibly that weekly gap from up above. Okay, right now the overnight high in the ES is 41.15. The overnight low is 80.25. SPY's overnight high is 409.53. Overnight low 406. Let me just look at the others real quick, then we'll go over a game plan. Triple Qs looking to gap higher. Remember, we had an outside week up in both SPY and ES. That's pretty powerful, and now they might be following it up with a gap to the upside. Russell also looking to gap higher. The bottom line is this. Even whichever contract you're still trading, there's going to be a gap. Okay? There's either going to be a gap on the December or the September contract. So the bottom line is whichever one you're still trading, no matter what I'm using as Friday's high, maybe I will go to this one, to the December contract. Bottom line is this. On a pullback where I'm comfortable, I'm going to be looking for longs. That's the bottom line. Right now, the gap is about $1.40. Now, again, there's 75 minutes to go, or an hour and a half prior to go to the opening. So a lot can happen in that time. But if we have a gap of a little bit less than $1, I will be looking for longs against Friday's high. I'd be out if we get accepted below the base of the price probe, which is L's high. Doesn't matter which contract. That's where my out would be. As far as a short, now again, we're going to be trading. That day from the 26th was a pretty major trend day down. Not surprised if we take back a bunch of these small single prints that we have. Then the question will become what happens in the middle distribution. H was an afternoon rally high from that day. So if we were to push up there early, either pre-market or in A period, might take a short the first time there, because that's a pretty visual level where the market last gasp attempt to rally and then rolled over again. And the acceptance above H is high from the 26th, then I'd be out. And then you have the other two large sets of single prints up there. It is not going to be an easy day to take back. Just please keep that in mind. And you see the December contract, because people started trading it earlier, how sporadic it is, for lack of a better word. Okay? So, a long on a pullback against the gap, a short possibly against that afternoon rally high as far as early plays. And then on the chart, again, this is a work in progress for me. We'll figure it out as we go. So here's the weekly. We're going to have an outside week up. And we're going to be above this trend line most likely. Actually, it's going to be pretty close. So we'll see how that reacts. Again, right, we're in balance. Now, once you take out Friday's high, we start getting away from this a little bit. The weekly goes from balance right to up. So you'd have the monthly imbalance. Again, that's a large balance. The weekly would go up if we get some legs above last week's high. And the daily is already up, with the gap being my main focus. 20-day moving average is 410.34 prior to the opening. So I'd say there's a good chance we're going to go test that today. It will be baby steps. This will not be an easy day to take back. I can tell you that much from the 26th. First, you're going to have to deal with some of those single prints, then the 20, and then the large set of single prints above. So there is a lot of work to do before we get to that high and even test this gap. So we'll see. Again, I think the only thing that would derail this movement to the upside is something with the PPI tomorrow. The Fed speakers, thank goodness, have to keep their mouths shut until next Wednesday. Good luck trading today. Have a great day, and we'll recap at 4 p.m.